Welcome to Trading-Pennies.com Chart of the Week, where every week we will examine the trading strategy behind one of our explosive daily stocks picks. All of our strategies are covered in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available on our site at Trading-Pennies.com. This week's chart is NEOM Technology Incorporated, ticker symbol NEOM, a proprietary technology company within the consumer services sector. What caught our attention in this stock was a consolidation into the descending support of the rising intraday 200 period moving average beneath a significant multiple time frame resistance as seen on the intraday chart. As noted in our manual, convergence of key pivot points among multiple time frame charts are significant as they represent a point in which the majority of traders prepare to take action and where the greatest degree of price expansion is potentially the greatest. Our job as traders is to recognize these key pivot points and take position at the earliest opportunity should we see signs consistent with entry. On late morning trade on Tuesday, February 17th, NEOM Technology demonstrated such a signal, an intraday volume spike and break of near-term and significant resistance at the .007 price level and where we took initial position. As always, prior to taking position, we always perform multiple time frame analysis looking for potential resistance levels, as this is always a concern of a trader when determining the risk-reward potential for any trade entered. On the monthly chart, we saw significant resistance at the .007 and the .014 level with underlying support at the .002 level. As noted in our manual, the strength of a resistance is based on how many times the price level turned away a stock on a previous advance from below. Once broken, especially on volume, this level is now looked upon as being strong support. Thus, with the subsequent breakout of this key pivot point on significant volume, we now look upon it as strong support and a level to add share should other factors favor continued movement on a pullback. Other significant patterns noted on the monthly chart was that of a downtrending channel drawn off the prior spike highs and lows from the spike high of the most recent breakout. We also saw an uptrending channel drawn off the prior lows and from the prior spike high at .008. This up channel was projected forward using the .008 as the lower boundary, and we projected a target price in future trading of the .016 level. On the monthly chart, we see significant key pivot points at the .007 and the .016 price levels, as they represent pattern convergence between price level support and resistance levels, the downtrending and uptrending channels, and the 20-period moving average. On the weekly chart, we saw the initial resistance turn support at the .0065 level, and using a channeled pattern projection based from the support at the .002 and the .0065 level, we saw the .011 and the .015 as future resistance levels. As noted in our manual, the development of patterns often project future price target points and the duration in which these anticipated targets will be achieved. We looked at the .011 as the initial target point as the difference between the prior support low of .02 and the breakout of resistance at the .0065 represented a .0045 move. Adding this to the current .0065 level, now turned support, we projected the .011 as near-term resistance. Other significant patterns seen on the weekly chart was the formation of an uptrending channel, the boundaries of which were drawn from the prior lows of this near-term advance and the spike high at .008 of the prior breakout. Once again, projecting forward, we looked at pattern projection targets of this up channel, using the high of the previous advance as a lower boundary, which gave us a projected target of .016 during last week's trading. On the weekly chart, we see significant key pivot points at the .0065 and the .009 price levels, as they represent pattern convergence between price level support and resistance levels and the uptrending channel. On the daily chart, we saw the .008 level as near-term resistance from the previous breakout high, and the strong support of the .005 price level, as well as the ascending 20-period moving average. Other significant patterns we see on the daily chart is that of an uptrending channel, the boundaries of which are drawn from the lows of the prior and current advance and the high of the prior advance. Once again, using pattern projection, using the high of the prior advance as a lower boundary, we saw a future price target during last week's trading at the .015 to .016 price level. Thus, in review, we saw the .008 to the .011 price level, and the .014 to the .016 price levels as key pivot points in future trading, and levels where we would closely watch the price volume action that would dictate our future trading strategies. Once in a position, our attention turns to exit strategies. As noted in our manual, a profit is only realized should you sell your position at a higher level than that which you entered. To this end, we look at the price volume action around key resistance level, in this case the 0.008 to the 0.011 and the 0.014 to the 0.016 levels. As noted throughout our video series, our most trusted stop loss point is the underlying intraday ascending 200 period moving average. On an intraday basis, we like to use this as our moving stop loss, providing the following rules. If it is broken with 2 consecutive candles in whatever time frame you use, we use this as an indication that the trend is changing and a good place to take profits exiting our position. If it is broken on significant volume during a single candle, we view this as a warning sign and will quickly look to any other confirmation signal for exit. To this, NEOM Technologies price volume action after the breakout continued favorably, going into our first key pivot point range of 0.008 to 0.011, and in so doing we noted the formation of a 45-degree uptrending channel forming. As noted in our prior trading video, the 45-degree uptrending channel is not as stable nor as reliable as the 30-degree channel, and as such we quickly begin to look around for other signs to confirm future advance or that of a breakdown. To this end, the action about the first key pivot point remained favorable, as intraday trading remained tight and the degree of separation between the underlying support of the intraday 200 period moving average and the current price action was not unduly extended. This changed though on mid-afternoon trading on March 18th as the price spiked higher and the stock consolidated well above the intraday 200 period moving average, and in so doing we saw the development of a 60-degree uptrending channel. As noted in our manual, the 60-degree uptrending channel is a dangerous one. When stocks go towards vertical and volume explodes, the stock now favors the development of a volume climax pattern, and as patterns go, this is one of the most consistent and ominous signs that a change in trend is near. Seeing this, we moved our initial stop loss point to just below the lower boundary of this uptrending channel, which was broken just prior to the close on March 18th. Being that the stock moved into the region of our secondary key pivot point level of the 0.014 to 0.016 range, we exited the majority of our position here. This was confirmed on opening trade on March 19th with an open within the channel followed by a volume sell-off and subsequent break of the lower boundary. In late morning trading, the stock demonstrated our stop loss rule of breaking the support of the underlying 200 period moving average on 2 consecutive candles, and where we exited the remainder of our position. For those that remained in their current position, we'll leave you with the development of an intraday head and shoulders pattern in which the neckline was broken. As patterns go, the break of the neckline of the head and shoulder pattern is a classic sell signal. Being that technicals on NEOM Technologies still look favorable on the daily chart, we will keep it in our stocks to watch list and are interested in its price volume action about the 0.0065 to 0.007 level, as this is where we anticipate it will pull back to test support in future trading. Until next week, from Trading-Pennies.com, this is Thomas McClellan, where our goal is to help you learn to become more successful trading the penny stock market.